You know I'm smiling. Market's down a lot today. I usually do market reaction from the studio, but I don't record on Fridays, and the good Lord has blessed me with a big down day in the market. So the Nasdaq's down almost 4% as of right now, 3.82. It is 2:30 Eastern time. The Dow is down 2.25%, and the Nasdaq's down 2.87%. Everythingmoney.com. So some of the big news items today. What is going on in the market? So AMD is down big. So the good news about that is it seems like the chip problem is across the entire chip sector. NVIDIA was warning, Micron, AMD. So there's a lot of this is going on in the markets. But guys, I'm always going to repeat this. This is what we talked about over the last couple of years that everybody thought we were crazy about. Eventually, something is going to happen that will cause things to go down. I don't know what it's going to be. In this situation, people are blaming Russia and Ukraine. That was back in February. They blamed it. Now they're blaming inflation. It's just overvaluation. When you raise rates a lot, and rates were your justification for high valuations, rates were so low. Now we're looking at the 10-year Treasury. Let's look at the 10-year Treasury right now. The 10-year Treasury is currently at 3.88%. That is a huge number. It was at 0.5% just a couple of years ago. So that means that the economy is going to probably slow down, and we will probably hit recession. Inflation was not transitory, as the Fed thought at first. I don't know if they really believed that. They just wanted to make people feel warm and fuzzy inside. But look at a company like NVIDIA. 52-week high of 164, 52-week low of 59. Actually, right now is at the 52-week low. Actually, it's the, let's see, what's it like in the last 10 years? So look at this thing. Major growth here, but they're already warning about a slowdown, which if you look at our videos, our 1700 videos, we did videos in the last year or two with COVID. We said, watch out for big spikes with big demand because of COVID or big falls. I mean, look at a company like Southwest. You're looking at this, and this is a company that, fell to $23, $24 a share in the middle of COVID, and is now currently at $31. And look at their revenue. The revenue fell annually. Let's go to annual. The revenue fell to $7.8 billion from $21 billion. Guys, that's a 66% drop. If you're going to believe that you can't believe that's stable forever. I mean, there's a reason for it, just like the chip sector, just like cars, just like all these things, like everything. Some industries were completely kept down and some industries were completely exaggerated because of COVID. But now we have the unwinding process of this market. The Nasdaq's down 30-some% this year. The S&P is down over 20%, 25, 26%, something like that. So let's check out SPY. That's the S&P ETF. 52-week high of 480. Currently at basically almost at its 52-week low. That was reached just in September, end of September. It's getting back there, 357. I mean, guys, this is crazy stuff. I don't know what to tell you besides get ready. Now, do I think this is over? Not even close. I do not think that this bear market is over or close to it. I look at three major stock market valuation metrics: the 10-year cyclically adjusted PE ratio, the stock market GDP ratio, which Warren Buffett loves, and the price to sales ratio. There are others that are great. These have very high correlations to the next 10 or 12 years of returns. And as of right now, they're all saying we need to drop another 45, 50% just to get to historical levels. So with that in mind, do I believe that the S&P is going to be close to 2,000 or lower? Yes, I do. Now, what could happen? Well, what could happen is GDP grows, it takes a long time to fall, so it never gets there. That'd be fine. That's what happened when I thought the S&P was worth 1,500 or 1,200 years ago. GDP got better, the economy and fundamentals got better, it pushed the value up. That could still happen here, but in the face of inflation, in the face of a probable upcoming recession, and in the face of really high interest rates, it's going to be much easier for stocks to fall. Much, much easier. So I want everybody to remember that. Let's go back here and let's look at the S&P going back to right before the tech crash. I mean, look at this. We have down, up, down, up, down. Oh my God, it's over. Down. Okay, thank God it's over. Down. Okay, it's over. Boom. Boom. I mean, this is going to happen. These are big jumps. Low to trough here. We're talking about SPY from 110 to 130. From 97 to 117. From 80 to 95. These are 15, 20% jumps each time. Every single time it's like, oh, thank God. Oh, thank God. Now look at us. This is just 1 year. Fall, rebound, fall, rebound, fall, rebound, fall, rebound. This is real. Fall, rebound, fall. I mean, this is the common tale of a bear market. And unfortunately, in the long run, valuations are what matter. Fundamentals matter in the long run. And right now, we're in a tough fundamental. The difference between price and valuations is very difficult right now. So I'm just going to sit here, and I have a lot of cash sitting around, and I'm going to wait for absolute screaming opportunities. I mean, look at some companies here. Companies that I literally was told Google will never, ever see 5 years ago prices. And it hasn't hit there yet. It's not there yet, but I was told that. Somebody once told me when Google was at 2,200, that we would never see. I don't remember. This is a bad example, but I remember somebody saying we would never see a certain price that we've already hit. I was just like, you've never experienced a bear market if you believe that we're not going to see prices. I mean, Amazon went from 113 now to $6 in the 2000 tech bubble crash. That's a 95% fall. 95%. It didn't go away, and it came up and rebounding and went to 3,500 before its stock split. Okay. But look at Google. A high of 150, a low of 98, and a low of 95, and it's currently at 98. Let's look at Microsoft. High of 350, it's currently at 234, basically a low. Let's look at Tesla, which I think has a long way to go. A high of 414, it's currently at 223 with a low this year of 206. I mean, guys, this stuff happens. We have to work out things out. We have to make sure that people have given up on stocks. That's how you get the new secular bull markets. So if you like this and this makes sense to you, I'm not a fear monger. I'm not FUD or whatever it's called. I'm not trying to put, I make my comments based on valuations. I stay in today and say, where do valuations say the next 10 or 12 years will be for returns? If they're not good, I pump the brakes. If they're good and great, I go crazy. You will see me in the next 2 or 3 years being the only person talking about how wonderful stocks are. Here's examples. I was bashing my fellow YouTuber out there about endorsing Palantir at over 20, 30, 40 bucks a share. I said that was an absolutely terrible idea. Let's look at Palantir now. Palantir is currently at $8.18. I made an announcement in our Everything Money community recently that Palantir is getting very, very, very interesting to me. It's losing it has net income loss, but it's starting to generate cash flow, and the growth rate is awesome. Here's the quarterly cash flow. That net income, let's go to cash flow. Quarterly in our software. Look, they've had how many quarters in a row of positive free cash flow? 1, 2, 3, 4, 5, a year and a half of positive free cash flow. I love that. So I'm looking at this going, okay, now I'm looking at this going, so it's amazing to me that in 2020, let's see where the price was in 2020. Let's go 5 years. It was upwards of $30 a share. They went to positive free cash flow, and now they're at 8. That is just proof that the market over a long period of time cares about the fundamentals. And I also want to show you proof that I'm positive on something that I was negative on before. Why? Because the price and value story changed. That's what mattered to me. And now I'm doing a lot of research on Palantir, and I've sold some puts at much lower prices than $8 to generate some income as I wait for the stock to fall. If it never falls, it never falls. But I'm going to keep doing my research on Palantir to understand it. That is my proof that I like companies. I'm looking at AMD. I just wrote some, go look at my AMD videos. I bashed it. Go look at Palantir videos. I bashed it. Now I'm writing puts on AMD. Why? Because it's getting close to where I want it to be. Now, all the stocks I've owned this year have gone down. Absolutely, and that will continue to happen. A bear market doesn't care if you have free cash flow or not in the short run. If the market sentiment is negative, markets are still a voting machine in the short run. And if everybody hates stocks and stocks go down 50, 60%, almost everybody's going to go down unless there's a specific story out there. Unless there's a specific positive story. It's going to be hard. The goal is to buy great companies at great prices. I don't agree that it's very difficult to buy great companies at great prices. I believe there'll be great prices for Google. Let's look at Apple. Apple's high, 183. Apple's low is 129, and it's currently at 140. It'll break through that 129. My bet is Apple will sell for under $100 a share before this bear market's over. And you might sit there and disagree with me on that one. Fine, but I believe at some point. Now, I'm not making a bet on that. I'm just going to wait. Because for me, Apple needs to sell around there for me to be happy with it. All right, so this makes sense to you. Please subscribe to the channel, and I guarantee if you watch 4 or 5 more of my videos, even if you don't agree with everything I say, you'll walk away understanding money and investing better, and you'll walk away saying, hey, this guy kind of knows what he's doing. I get it. I don't mean it to be arrogant. I just mean it as I look at companies, stocks, as buying a piece of a business. I look at it as if I'm buying the entire company. Would I buy this entire company for this price? If the answer is no, then I'll buy it. If the answer is yes, I start buying it. That's as simple as that. Thank you very much for your time, guys.